Welcome back to Selling Frankston. In today's episode, guys, we are a bit lonely. We don't have our special guest, don't have Dad beside me. What I have done is kept him in the frame with his James Bond appearance in our little DL drop cards. Guys, I hope you're having a fabulous day. Guys, the Reserve Bank of Australia, breaking news, have come out yesterday and raised the cash rate up 0.25 basis points. So the cash rate now sits at 4.1%. What does that mean for sellers in Frankston and Frankston South? Well, today we have talked a lot about how good Frankston is, how good Frankston South is, how many good schools you've got, what they're doing with the major activity centre plan, all the emphasis on the amount of things that Frankston has going for it, the amount of new restaurants coming in. I actually had a dream that the Italian place, the pizza place coming in. I had a dream that I saw it and it was one of the best, and I took a photo of it. I don't even know why I had that dream. That came to me yesterday. Anyway, it's going places. But what is the data actually telling us? Because the RBA have come out, people think that everyone's losing their minds. Logical buyers, yes, will firstly take a step back and go, what does this mean? Am I going to be super prominent and really compete for a property? Unless you've got sentimental value or an emotional value to a property, good properties are still going to sell. That happens in every market, whether it be a cold, warm, hot, indifferent. Good properties always know how to attract buyers into their homes. But what does it actually mean? Well, guys, we've had a significant run. And I think I've spoken pretty heavily about Frankston and how well we have gone. I actually had the Frankston South data up first, but we will jump straight into Frankston and what's actually happening in the marketplace. So the median value, guys, jumped up. There's various ranges of percentages that it has jumped up, but CoreLogic, which is a valuation system we use, has it at $871,000 as the median house price. That is fabulous. The growth of 14.8%. And I think when I ran my numbers, it was roughly about between 16 and 20% growth. So that's huge increase. The numbers of sales obviously follows through. We had an influx of buyers agents, an influx of investors coming from Sydney, seeing true value in what Frankston had to offer. Just due to the hospital upgrade, you've got, so many good things. You've got the AFL women's playing down at Kinetic Stadium. You've got Kringle Hub, you've got Frankston CBD, you've got the Metro train line with the end of the train line, you've got the Sporting Globe that has come in, you've got all these, common folk is now a wine bar. Great things are happening. The most important thing, and one thing that has significantly come down, so number of sales is up to 676 over the last 12 months. That is up 18.4%. So normally that does happen when a market is moving upwards. You will see more people jump on the train and start to transact. So that's an extra 1 in 5 properties coming on the market. So when you've got true demand, properties selling, and if the prices are continuing to go higher, that is great. But the best one to look at, the median days on market. And the median is just plucked right in the middle of a full data set. So it's not even necessarily the great sales. That has come down to 15 days. That used to be, we're just going to click on this, a year back, it was 24 days. So it took you just over 3.5 weeks to sell a house. If you're putting your property on the market and you're expecting a great result in Frankston, within 2 weeks, you should have a result. You should be sitting there with a contract, unless you're going through to an auction. You should be sitting there, I reckon, and correct me, and for those out there, I reckon, who track the market pretty heavily, I reckon it would be even lower if it wasn't such an owner-dominated market. Because I reckon, auction-dominated market. I would say between one in 3 homes are selling at auction in the Frankston market. So, guys, another really good thing and something that we see quite often when back to the owner-dominated correction is the average hold period. So how long does an owner in Frankston hold their property for? It's actually now up to 14 years. That has grown. That continues to grow. Used to be around 10 years. Actually, 20 years back, if you had have asked Dad, the data probably was reflecting closer to 7. It is doubled. We are now a 60% owner versus 40% investor market. So it is growing. It used to be closer to 50-50. Now, the problem is not enough stock out there. The active listings, 93, which is significantly lower, and the stock on market is 3.8%. That's down 11.6%. That's a huge decrease, guys. That means that there's not enough homes to facilitate this amount of demand. Will this continue though for 2026? Because this data set has been for the last 12 months. Now, the RBA come out and raise the cash rate up twice for the year. This does not help anyone on a serviceability, and Frankston is predominantly going to have a lot of people coming in, first home buyers, investors, and a lot of people that are going to be loaning money from the bank. So it doesn't necessarily help. We will probably see, there would have been 75,000 posts out there yesterday with this RBA cash rate increase. I reckon give it 6 to 12 months and we'll truly see where it all stands. But right now, we're in a very active and very hot market. The data's saying that there's so much growth. I would expect to be tracking. I'm going to track for the next couple of weeks. And we had Sky Hammer on, who's a buyer's agent. He tracks the days on market, is his biggest tell on what an area is about to do. So we will be tracking that a lot more heavily. That was Frankston. So there's some significant growth. We'll go into the units now. That was for a house. Median days for a unit in Frankston is $590,000, up 10.7%. The number of sales is 463, so that's 11% up. That's no surprise, guys. You've got the hospital coming in, $1.1 billion being spent. A lot of people want to be close. You got a lot of people in Frankston that are of the older generation. I don't like saying they're old people. That's not what I'm trying to say here. But you do have, people that need those amenities. And we are now, it's the peninsula, it's the crown jewel, as Dad describes it, of health down on the peninsula. So where else do you go unless you're going all the way up to the city to get that level of amenity in a hospital? The median days on market for a unit selling is 22 days. That is down 18.5%. So again, market is really coming down. I would suggest units may well and truly continue to push higher and higher because we are seeing a lot more downsizing, and I reckon you will see people start to downsize on the mortgage as well. The other thing that is important to be aware of, stock on market, 6.8%. That is down 18.4%. So that's actually lower. You've got 1 in 5 properties less available. So the demand is pushing and pushing, and I reckon that'll only continue to flow through. It won't have the same amount of growth with these RBA increases, but because you've got the first home buyer scheme, the no income cap up to $950 now, and you've got a lot of downsizing happening in the Frankston market due to the hospital, I can only see this area and these stats continue to grow. How long for? We'll wait and see. Now we're going to jump into Frankston South, and we're going to go straight into the house median value, which is $1.29 million, up 9.6% for the last 12 months. The number of sales in the area was 315. That is up 6.8%. Once again, when the market grows, everyone jumps on the board because it makes a lot of sense. It's like, hey, the train's moving. We're going in the right direction. Do you want to jump on or not? Now, median days, a really good fun fact. This was sitting more or less around 34 this time last year. We are now down to 27. We have seen a lot of interest and properties are selling a lot quicker than not. Now, stock on market, 5.4%. That is down 7.3%. So not as strong as statistics, and as you can see with the growth as Frankston, but still very good growth for Frankston South houses. And we're going to jump straight into the median for the units. And this is a surprising stat for you guys to know. Units in Frankston South outperform Mount Eliza. Median value is $821,000. That has gone up 12.3%. Now, some data points out there have Frankston South units going up over 16% for the year. What a surprise, guys. What do we reckon that's for? That's the hospital. Has to be. You've got all the great amenities. You've got you got Henry's going into Kringle Hub. How good's that going to be? And then you've also just got the Frankston Major Activity Centre. You've got, Harbour. You've got Baylight. You've got these beautiful apartment complexes going in on Nepean Highway. Pace just did their first dig, I think, over the weekend. And you've got, people going down to the sport. It's a real true vibe. For those people that haven't come to Frankston in the last 5 to 10 years, get yourself down here, get an understanding, get a feel. It's unfortunately Carlsberg Beach Club is now closed because summer's gone. But it's a thriving community. It's only getting better. Now back to the unit metric. Number of sales, 72. That's, not a surprise. That's up 53% though. So normally speaking, there's only 30 to 40 sales of units in Frankston South. That has doubled. That has doubled, guys. That is huge growth. That just tells me that people are wanting to downsize, get into the area. And it's funny because we see a lot of Mornington and Frankston South buyers. They either float between one another, but with the amount of amenities and the things that Frankston has on offer, people are going into a premium location like Frankston South. Median days on market, this is a very telling, and I think this is only going to continue. 22 days to sell a unit in Frankston South. That has come down 42%, guys. So that was sitting up around 35, 36 days. That has dropped to 22. So 3 weeks from the moment you put your property on the market. That is insane stats. Now, stock on market, there has been an influx I have seen of properties come on. That is at 9.24 with a 30% increase with stock on market. Now, a lot of those are under offer. I have gone through those stats just because I looked at that and went, wow, 30%, that's an extra 3 out of 10 homes that have come on. But a lot of them are transacting. A lot of those properties are moving quick, as you can see, within 3 weeks. But a lot of people are starting to jump on that same boat. So I don't think this cash rate is going to implicate any of the units as such, because you've got so many first home buyers and downsizers that are really gravitating towards those properties. Now, in terms of the cash rate, what it's going to do, it's going to be an interesting one. I think that foot traffic will thin out a little bit. If you are in two minds about whether or not you should be selling, I actually think it's not such a bad time, because if you can put your property on the market, get yourself a longer settlement, what's to say 6 months from now, if there's another cash rate increase, which the RBA and a lot of the media speculation is saying there will be another one, whenever they meet in just under 6 weeks or 5 weeks and such time from now. So it'll be an interesting time. Obviously, anything under the $1 million is very buoyant, very active. We've got campaigns on the market at the moment with a significant amount of interest on those properties, and we've got them going to auction. We've got a beautiful one on Macomb Boulevard, a beautiful unit, quoted 645 to 700. That's a 2-bed, 1 bath. You don't get that sort of location where you can walk down to Sweetwater Creek, you can walk to the Norman Ave precinct, you walk to the beach, walk down, Oliver's Hill, get yourself a coffee and walk back home. And then we've got a stunning one, 3 Spring Street, Frankston, a 1930s Californian bungalow style, 3-bed, 2-bath, set on just over 300 square meters, and then, just under 400 square meters, 395. And then we've got a beautiful brand new townhouse, which feels like its own house because it doesn't have a body corp. It's a dual block, so you got one at the back, one at the front. We're selling the one at the front. That's a 4-bed, 3-bathroom, 4 toilets, double story, double car garage, and that'll be, those 2 properties go to auction next Saturday. We've got Macomb going this Saturday. So if you guys have any interest, we were lucky enough, we put away 2 over the last week of sales. There's been a buoyant amount of activity. We've received 2 offers on a beautiful acreage property, and we received 2 offers on the property there at 320 Robinson's Road, which we now have under contract. We will disclose the price very, very shortly. And we were lucky enough to run a very competitive process for 2 land lots out in Lang Warren. So there was a 989 square meter block and 800 square meter block. They both got city, beautiful views, and very much a nature feel. So whoever, the people that have bought them, there were 12 offers on one and 4 offers on the other. Very competitive process, but they're going to be building some substantial homes that they're going to love and be able to call their forever home, or a home that they can live in for 20, 30 years, or if they need to rent them out, they're definitely going to win out on them. So guys, what will the market do next 12 months? It'll be an interesting one. I'm not going to be a fortune teller anymore. Definitely tried to do that during COVID, and that threw a spanner in the works. All I always say is, guys, if you're thinking about selling, focus on putting your buyer hat on. You want to have as many people at that open home. If you're running a private sale, your first 2 weeks is super crucial. If you're running it to an auction, guys, a big takeaway, and something I actually really wanted to touch on from last week's podcast with Sky Hammer, which was fabulous. If for those who don't understand what a buyer's agent is, please go back, watch that one. It is a really good understanding as to what value he brings. His biggest thing was he tries to buy off market. And what off market is, it's before it even hits any form of advertising. The agent has just, been engaged by the owner just to say, hey, put it to your book, go and call a few buyers if you've got a couple and bring them on through. And he will always try and buy properties like that. I always say, guys, the best way, and it's sort of funny because we have opposing opinions, but that's where, great things can happen. we always say competition drives price. You know, if you have one person fighting for your home, usually speaking, you're going to meet somewhere at some point. But if you have multiple people, that's when great things can happen. If you set your standard, you set your bar of what you're willing to accept, and then you give clear certainty to the buyers of what you're actually going to take, then that's when, if you've got multiple people fighting it out, the emotional one kicks in. The emotion kicks in all those buyers and pushes it up. So I reckon, look, investors have shifted over to Geelong. That's no word of a lie. We've seen a lot of buyers advocates are still looking in Frankston. I think Frankston's still got a lot of room to grow, especially Frankston South. I think that that's only going to continue. I feel like we haven't felt the complete amount of growth there just yet. I think Frankston's definitely had a very good run, and you got to look at it like this. What goes up must come down. It's not going to go down and cliff down, but I do think that it will flatline a little bit. The economic factors, you've got so many at the moment. We've got an election coming up as well. So guys, if you are thinking of selling, I do think it's a great time to be locking in something, getting a longer settlement, and on the other side, you might be able to win out just that little bit better. Or if you can park yourself somewhere for the interim and then go in about a year's time, I reckon we'll be feeling that pinch a little bit worse. I reckon the market will slow off a little bit. You'll definitely notice open homes won't be as popular. And when they are, it is because they have a realistic seller who understands what the market is doing and they're ready to make a deal happen. So guys, thank you so much for watching. Any questions, anything that you do have, please drop it in the comments. We do appreciate you guys for watching, and we can't wait to see you in the next one. And it'd be good to actually have Dad back on the next one. I do believe we are going to be having a very special guest on. It has just been a hard one to get, and it's let's just put it this way: Funky Town is if anyone with a bit of a hint, that should give it away. But guys, I'll see you in the next one. Have a lovely day.